Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're covering one of the more hotly debated topics in financial markets over the past few weeks, and we're talking about the credit rating downgrade and credit rating actions taken by major credit rating agencies on Trinidad and Tobago. Now, with the recent downgrade from Standard & Poor's from BBB plus to BBB of Trinidad and Tobago, there have been many responses coming from prominent figures across the country from, yes, it's a cause for concern, to, well, it doesn't really matter, we're still investment grade. So the question today is, does it really matter? And what are the prospects for the country in terms of future rating actions, as well as the impact on investors? Let's take a look. Now, in terms of credit rating history, well, there has been a downward trend over the past several years for the credit ratings of Trinidad and Tobago, and the S&P rating in that green line has fallen from an A from around April 2016 to its current level of just around BBB plus, and that most recent rating action was a one-notch downgrade from BBB plus to BBB. However, it's still above that speculative or junk investment or junk grade credit rating at one. Here we have some technical difficulties, but it's still above the investment grade credit rating of BBB minus, and that's unlike the Moody's credit rating, which has fallen to just around Ba1, and it's again in that speculative grade or below the investment grade line and in speculative grade. Now, what are some of the factors that credit rating agencies consider? Well, they are based in terms of four broad categories. We're talking about savings, borrowings, spending, and earnings. And in terms of savings, we got a good report from both credit rating agencies, Moody's and S&P. Now, they are speaking specifically to the Heritage and Stabilization Fund, and if we look at the HSF over the past several years in terms of value, we have seen a nice steady upward trend with the value of the HSF increasing from just around $5.58 billion in September 2016 to its most recent figure of just around $6.2 billion in July of 2019. So a nice upward trend there. And of course, it highlights again the importance of investing, because much of that would have been driven by investment gains from investing over time. Now, on the other hand, net official reserves and import cover was also mentioned by both credit rating agencies. And while it's healthy, there is a declining trend in how much international reserves the country has. Now, international reserves held by the central bank would have fallen from just around $10.7 billion to its current level of just under $7 billion, and that's a 35% decline over the period in question. And that import cover in terms of number of months has declined from 12.4 months to just under 8 months. Notably, however, it is well above international standards of 3 months. So again, we got a good mark there. In terms of borrowing, we have seen a gradual increase in borrowing over the past few years, with debt to GDP increasing from just under 49.5% in March of 2015 to its current level of just over 60% in March of 2019. Importantly, most of our debt is domestic in green, around 43.8 of that 60%. But there has been an increasing trend of international borrowing, moving from 8% in 2015 to just around 16.3%, so almost doubling in relative composition of our total borrowings to 16.3%. So again, still well within international norms, but again, there's a cause for concern as that continues to deteriorate to some extent. On the revenue side, well, there is projected pickup for the energy sector, so that's one good factor. And in fact, BHP would have recently declared or announced rather promising results in its deepwater drilling program. And by 2021, we are expected, or projections are, for natural gas production to increase to at or near capacity levels for what our domestic demands are for industrial and private consumption. So that's one good factor that would have been supportive of ratings. On the other hand, lack of a revenue authority implementation was one of the downsides mentioned specifically by S&P, as well as the lack of data transparency. And this, according to that particular credit rating agency, would have contributed to continuing tax leakages and not being able to enhance revenue over time. So certainly some work to do there. And finally, on the spending side, well, spending has moderated over time, falling just some 20% from 2015 to just around the last figure of 2017, 2018. So what does this mean for investors overall in terms of the credit rating downgrade? Well, it seems as though investors have been shrugging it off. Since the rating downgrade has taken place just around 2 weeks ago, there has not been too much change to the price of Trinidad and Tobago US dollar bonds. Now, all else equal, as credit ratings fall, the cost of borrowing should go up, and it means that investors would demand a high yield. So we would have expected that this yield would have gone up, that return rather, from 4.3 at its current level to probably a bit higher. That has not been the case. It's been fairly stable since the rating downgrade. So what it means is that investors may have broadly expected that credit rating downgrade to take place. In comparison to some of our neighbors, in terms of Colombia and Mexico, who are also energy dependent, their bonds, which are comparable in credit rating, BBB plus and BBB minus, with similar terms to maturity around 2027, are trading at between 3.2 and 3.5%. We're at 4.3%, so around a 1% difference there, positive difference. And for Bermuda and Bahamas, they are trading at 3% and just around 4.5% respectively. So still some value, it would seem, that investors place on holding Trinidad and Tobago debt. And we'll be certainly looking onward to see if there are any reactions by international markets. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.